I greet you all and welcome you to the lesson. The subject is governance and compliance audit. We're going to begin on a new topic, namely governance and compliance risks. This topic has these are 5 subtopics. Number 1 is identifying, managing, and monitoring governance and compliance risks. Number 2, impact of non-compliance. 3, the role of ethics and compliance officers. 4, identify, prioritize, and assigning accountability for managing existing or potential threats related to non-compliance or ethical misconduct. Then lastly, identifying laws and regulations with which the organization is required to comply in all jurisdictions where it conducts business, as well as critical organizational policies. So these are 5 subtopics. The topic is governance and compliance risks. But before we get into the first subtopic, I want us to first define what governance risks are, what compliance risks are. What is the meaning of governance risks? Governance. Let's begin with governance risks. What are governance risks? Candidates, governance risk refers to the potential negative consequences that an organization may face due to inadequate, ineffective, or failed internal processes. You understand? It refers to the potential negative consequences. It refers to the potential negative consequences that an organization may face. Ineffective or failed processes and external related to its role direction. And it stems from in how an organization is led and managed. There is a way in which organizations are required to be managed and controlled. So governance risks are weaknesses that stem from how an organization, weaknesses in how an organization is managed or led, or how decisions are made, or how oversight is exercised, and so on. So in essence, governance risks arise when the structures, processes, and also culture that guide an organization's behavior are not robust enough to ensure sound decision making or ethical conduct and achieve objectives. So governance risks refer to the potential negative consequences. And these consequences could be financial, reputational, operational, or even legal that an organization may face, potential threats that an organization may face because of its failure to adhere to certain governance principles. If an organization does not adhere to the best practices in corporate governance, then that organization is likely to face certain consequences, which we are calling governance risks. And key areas where governance risk is often manifests include governance risks often manifest in areas. 1, board effectiveness. Board in if, for example, lack of independent directors or excessive dominance of a single individual. When you have a single individual dominating the board, that can lead to governance risks, that can lead to potential for negative consequences, board ineffectiveness, lack of independent directors. Okay? For example, you may have a very powerful CEO whom no one questions. That can lead to a governance risk. We may also have insufficient diversity as part of board ineffectiveness. Okay? So you have lack of board independence at the board level, and this diversity will be diversity in skills, lack of diversity in age, and so on. Insufficient diversity in experiences, in gender, in skills on the board. That can lead to governance risks. That can lead to board ineffectiveness. An effective board is one that has diversity of the people who are sitting on it. People have diverse skills, diverse experience, and expertise. You understand, candidates? There's also the question of failing to challenge management. Failure to challenge management. Failure of the board to challenge the management, or lack of proper oversight. Where the board has not oversight management, that is also another area where governance risks may manifest. Am I making sense? Poor attendance, committee meetings, board meetings. That can lead to board ineffectiveness. There's also lack of clear roles and responsibilities. Lack of clear roles and responsibilities at the board. So candidates, we are defining governance risks. And we are outlining here how these risks may manifest. One could be through board ineffectiveness. Number two, and lack of disclosure. Lack of transparency and lack of disclosure. Like inadequate or misleading reporting of financial performance, risks, and other material information to shareholders and stakeholders. It's also, as part of lack of transparency, failure to disclose conflicts of interest. There is opacity in executive remuneration and so on. Another area is unethical behavior. Unethical behavior and corruption. That is absence of a strong ethical culture at the board level, lack of code of conduct, weak whistleblowing mechanisms. We may also have instances of fraud, bribe, or other illicit activities by management or employees. That is how governance risks may also manifest. You understand, candidates? Unethical behavior. Then, four, we have ineffective risk management oversight. Ineffective risk management oversight. That is failure of the board or a dedicated risk committee to adequately identify and assess and monitor and also mitigate significant organizational risks, including strategic risks, operational risks, financial risks, reputational risks, and so on. Ineffective risk management oversight may also be due to lack of clear risk appetite statement. All right, so we have ineffective risk management oversight. That is another way which governance risks may manifest. Another way is poor internal controls. Poor poor internal controls. We may have weak internal control environment that doesn't safeguard assets, that doesn't ensure data accuracy, or even prevent or detect fraud. Poor internal controls also may be due to lack of internal audit independence or resources. Another way in which governance risks may manifest is stakeholder disregard. Regard of stakeholders. This is failure to consider the interests of all key stakeholders like employees, customers, suppliers, community, the regulators, and so on in decision making. So these are ways in which governance risks can manifest. Board ineffectiveness. If you have a board that is not effective, that will lead to these threats you are talking about. If there is no proper transparency and disclosure of information, that again is a problem. Unethical behavior, ineffective risk management, oversight, poor internal controls, stakeholder disregard. Now, what are some of the examples? This is the definition of governance risks, and this is how these risks may manifest. Let's give examples. Examples of governance risks. Now, one could be political interference in state corporations. We have examples like nepotism and tribalism in board appointments. We may also have concentration of ownership and control, including inconsistent transparency and disclosure, and so on. Political interference in state corporations. Historical candidates, we may have political appointments to boards and management in Kenyan parastatals, which can lead to weak governance. It can lead to corruption and financial mismanagement as decisions are influenced by political agendas rather than sound business principles. Another example is concentration of ownership and control. In some private companies or family-owned businesses, highly concentrated ownership can lead to insufficient checks and balances, potentially allowing dominant shareholders or founders to make decisions that are not in the best interest of minority shareholders or other stakeholders. Inconsistent transparency and disclosure is another example, where some companies may provide only the bare minimum legal disclosures and also withholding valuable information on ownership patterns, executive compensation, and also related party transactions, which increases the risk of insider trading or financial misreporting. So that's all candidates for governance risks. Let's move on to compliance risks. Let's define compliance risks. Compliance. What are compliance risks? Now, compliance risk is the potential for legal penalties. It's the potential for legal penalties, financial forfeiture, social potential for material loss. Compliance risk is also potential for reputational damage. Reputational damage that an organization may face due to its failure to adhere to applicable laws. That an organization may face due to its failure to adhere laws, regulations, policies, industry standards, internal etc. Compliance risks refers to the potential for legal loss, potential for legal penalties, financial forfeiture, material loss, and reputational damage that an organization may face due to its failure to adhere to applicable laws, regulations, industry standards, internal policies, and so on. It may also include contractual obligations. Let me include contractual or obligations. So these are risks, compliance risks. These are what will happen to an organization in the face of failure to adhere to laws, regulations, industry standards, internal policies, contractual agreements. It is fundamentally about the risk of non-adherence to rules. It is the risk of non-adherence to rules. It's the risk of non-compliance or adherence to rules. What will happen when the organization does not obey rules? That will happen is what we are referring to as compliance risks. Compliance risks. That failure to adhere to compliance, or to comply, is what you are referring to as compliance risks. You understand, candidates? And key areas of compliance risks would include technology. Every company has procedures in each and every department. So failure to comply with these internal policies is what we are referring to as internal compliance.